And we are live. Good afternoon, everybody. Welcome to today's live stream of the release of a US inflation data brought to you by the PrimeXBT Trading Academy. My name is Dirk Hartig. I'm the head of trading education here at PrimeXBT, and I have the pleasure and the honor to witness the release of this really important economic data today. I can see we have quite a number of people already online again. Hello, Diego. Good morning, Mirkes. Good morning. You're probably living somewhere more to the west than me, maybe South America, I would say. Tucker is there again. We have Francesco there. We have Kerry there. So a lot of people of our regular viewers again out there. Hope you guys are doing well. And we want to jump right into the action very fast without wasting too much time. So today, as I said already, we want to see how the inflation data, the US inflation data is going to be. You guys remember we had the non-farm payrolls last week. Job data was a little bit more weak than expected. So this is actually what the Fed has been hoping for in terms to pause the interest rate hikes. There's a potential last interest rate hike probably for this year coming in September yet. Later we are going to have a look at that, how the probability is. Now today we want to concentrate on the inflation data. And here, very important, out of those four metrics that are going to be released is the core inflation, YOY, that means year over year, with a forecast of 4.8%. This especially is kind of the inflation rate that the Fed, so the US Central Bank, is monitoring, and which goes into their decision-making process of whether they should change the interest rate environment. The second one here being for the immediate reaction of the market, let's put it like this, the normal inflation rate, or CPI, Consumer Price Index, year over year already. And you might have noticed already after the last reading of 3%, where the forecast for today is 3.3%. So there's a little bit of an increase in year over year inflation expected today. It's going to be interesting how this metric is going to come out in reality. As I said, we still have 25 minutes to go, so plenty of time to talk about everything. As always, guys, and it has become really a loved custom for me, really, in these live streams of the economic data release. We have our live training event again. So I'm going to trade the positions that the Academy Telegram community voted on. If you haven't cast your vote, please go to your Telegram channel, to the Academy Telegram channel, and cast your vote now. The top two positions from there I'm going to pick later on for trading. And if you've been following the streams for a while now, you know that our track record with these type of trades is actually very good. So far, there was only one event, where we had like a plus minus null, where we didn't earn, also didn't lose anything really. On the other events, we managed to rake in quite substantial amounts of money, especially considering that this is news trading. So usually everything we win or lose is done within the time span of 1 to 2 minutes. I believe last week for the non-farm payrolls, we managed like $190 within just 1 minute of trading. So, this is kind of nice, some extra money on the hands. And as always, also, you have the opportunity to ask your questions. I will answer these questions later after the release of the data, if we have time, also before the release of the data. If you copy your question and then paste it onto our Discord community, into the general channel there, you stand the chance of winning $25 also for your PrimeXBT margin trading account. So that's some extra nice money you can rake in there. And what is most important in terms of preparation for news tradings, it's of course that we have our account ready. I did so already. So I have a bit of balance here on my trading account. As you can see, I still have actually 3 orders in here. Bitcoin, I wanted, these stem from our live stream, Bulls, Bears, and Breakfast that we did on Tuesday morning. where I had an order for Bitcoin US dollar. I wanted to buy it at 28,500 US dollars. Kind of mean, I was right in my call that we would turn around sooner or later because of this Bollinger squeeze pattern resolving itself. But it didn't quite go all the way down to 28,500 US dollars. However, I want to not have this limit order, this limit buy anymore during this live stream because, with news release, it's always like that. If the actual number is very, very different from the expectation, we're going to have a lot of upside and downside volatility. So it's very easy that you end up actually with positions that you didn't mean to enter anymore because maybe the economic number, the economic release, paints a new picture of how the economy is doing at the moment. Same here for S&P 500. Euro US dollar also, I wanted to buy here at 109.25. Sadly was also not executed. I think we came 5 pips close to that. But this is how it sometimes is with trading. So for now, I want to delete those. Maybe later I will re-enter those when the market calmed down a little bit again. But now we, of course, want to concentrate on new things. If you have not done so already, please also remember always to if that is available, of course, to use a promo code. And we have a nice promo code, which is fantastic, in my opinion, for trading on short-term horizons. We are aiming to get a couple of pips here, maybe a couple of dollars in crypto. Today, current promo code is Academy -50. You get a 50% reduction in fees. And you can see here on my trading account that I activated this already. You see this down here. So mine is still valid until the 18th. So still for another 18 days. You can enter this here. And then you'll see here the discount of 50%. So that's quite a lot. I'm going to change here also this one to a 5-minute time frame. And as I said already, if you don't know anything about the Telegram Academy group, Telegram Academy channel, you'll find a link to that in the description of this video or later on in the pinned comments of this video. This is basically a channel where I share several times a week my thoughts about the markets, which positions I'm looking for, or why I'm also not entering trades maybe at the moment. I think it's important, to kind of, I aim with this really to help you to not lose the bigger picture out of your head, so to say. Okay, let's have a look here at the data that we're expecting. I said earlier, 3.3% is the expectation of the inflation data coming in. So what is going to happen to the markets? And I'm going to show you this by illustrating it here, for example, on the S&P 500. So when that data comes out, and for example, the inflation is higher, let's say 3.5%, instead of 3.3%, we would see risk on assets, for example, stocks. So for example, the S&P 500 dropping, going to the south here. Maybe not by that far here, it's a daily chart, just to illustrate things. If the number comes in better, so instead of 3.3%, maybe it's 3% again, maybe it's 3.1%, or maybe even below 3%. For sure, we would have a risk on scenario, meaning stocks would go higher, and when stocks go higher or lower, of course, we probably would also see a move in Bitcoin. And for me, it's very, very interesting. If you watched me talking about this on Tuesday morning on Bulls, Bears, and Breakfast, I said we are in this phase right now where we have this Bollinger squeeze again, where the Bollinger Band, so that's the green one, and the red one here, surrounding always this candlestick chart here, when these are coming very close together, it's only just a matter of time always until you have a violent breakout, either to the north. This is what happened last time in the mid of June, when we went all the way from 25,000 to, and were stopped no earlier than 31,000 US dollars. Then kind of we went into the sideways range again, and you can see how much the Bollinger Bands again have contracted. So right now we saw with the news of PayPal having new stablecoin that motivated the markets to perform a little bit, but we were again here stopped. And let me take this circle here maybe away. I think you can better see it. By the way, do I have my screen big for you here to illustrate things? I do have that. Good. So sooner or later, we are going to see the same again, either a violent breakout to the north, which probably would lead us really above 31,000 US dollars, or something to the south, leading us under this barrier here, this support at 28,500 US dollars. And I want to notice that, I want to point out that the 100 days moving average also is exactly at this level. This is probably one of the reasons why Bitcoin had a hard time going under this price. I know a lot of people on social media, influencers, analysts have kind of been expecting that the market goes below 28,500. I said, for me, still, this is a good area to buy. It's probably not a good area to buy anymore, of course, if the inflation data comes in very bad today. So something like 3.5%, 3.8%, or something like this. Probably we would go through all the way here to 27,000 down here. But, I don't want to influence you guys in casting your vote. Let me have a quick look here. Yeah, I see 61 of you have voted. Very interesting results, in my opinion, something we have not seen to my memory up to now. I like that. That's quite exciting. But you still have about 8 to 9 minutes to cast your vote. Let's have a quick look here at trueflation.com. So Trueflation is a free service provider that tries to calculate the US inflation rate. I think they do this for the USA. I think they also do this for the UK, but we concentrate on the US inflation rate here today, of course, in real time. And they say at the moment, their inflation rate is at 2.37%. So actually already very close to this target of 2% that the central bank, the US central bank, the Federal Reserve is trying to achieve in the long run. And now, sorry guys, just need to check here. I thought for a moment that my mic is off. That would be funny. You just seeing me here moving my mouth without hearing anything. Now, we are not going to see this number because it's real time. The number we are seeing today here is the number for all of July. So it's always looking back, obviously. But what we can do here is we can always have a look like what was the general, let's say, tendency within the last month prior to release. And what we can see here since end of June, where the reported rate was 2.28%, it kind of went sideways, slightly up actually by end of July again. So that meaning for me is just important or to kind of get a general idea. Is like the forecast of 3.3% very, very off in the tendency? So if, for example, Trueflation would report an area like this, like a really, really inflation rate that came down heavy, like we saw here in May when it dropped from 3.9% to 2.84%, so minus 1%, and the expectation would be, it's going to be higher, then I would take maybe even a directional bet saying like, for example, okay, I think it's going to be better than expected. It's probably going to be below 3%. But this is pretty much in line with what we're expecting here. So 3.3% is going to be the metric everybody's looking after. Now, why is that important in terms of interest rate? Because, as I said before, we actually only target that central bank, that most central banks in the world have. And the US central bank, the Federal Reserve Bank, is one of those central banks, is to keep price stability. Price stability being defined as 2% per year. We are very close to that already, but not yet quite there. So the Federal Reserve is going to do everything in their powers and their array of weapons how to achieve that are actually quite not very numerous, let's put it like this. It's mainly manipulating the interest rate environment. Were trying to bring up the interest rates to bring inflation down, because by that they are kind of stopping consumption a little bit. And they said, Jerome Powell said during the last rate hike we saw just, I think, like 2 weeks or 3 weeks ago in July, that like the missing component is still the job market, which needs to be a little bit weaker. So we kind of have a checkbox on that for the last reading. Non-farm payrolls were lower than expected on Friday. And he wants to see, or they want to see, inflation really coming down as well. He said it's going into the right direction, but it's not quite there. They need a couple of more readings to see really there's a trend, and it's not just, you know, an outlier in the data. So ideally, in terms for us to not see any more interest rate hikes would be either if these if the forecast is met of 3.3%, or a little bit lower. So ideally would be something of, for example, 3% again, or maybe 3.1%, or even 2.9%. And especially would like to see the core inflation being a little bit lower than 4.8%. This would be ideal for less likelihood of interest rates being hiked again on the 20th of September, when the next interest rate decision is already in the USA. And that's not too far away. You know, it's just actually 40 days away from now, or 41 days away from now. The way it looks right now is that 84.5% of market participants are expecting interest rates to stay stable. 15.5% expect another rate hike at the moment in September. And I can assure you, if we see better than expected inflation today, that this number, these 84.5%, probably is going up to over 90% very quickly. But it's still a long way. What is the time? 2:18. So we still have a little bit of time left. Maybe we can answer one or two questions quickly. Let's see, what do we have here? Just scrolling down a little bit. That we talked about. So question here of Donghan. Where will cryptocurrencies go as interest rates continue to rise? If interest rates continue to rise, cryptocurrencies are going to have a hard time in appreciating in price. So it's going to be harder for Bitcoin and Co. to go up in price. It's nothing that I expect. I think usually maybe there's going to be one more hike. I don't know. I kind of expect there's not going to be one more hike. I think we're going to see interest rates going down throughout 2024 again, which should be good for cryptocurrencies, of course. This is a nice one here, guys. Juniko, hello, excuse me. Do you think next month will be a red month for BTC again? I want to put the house in. Juniko, please don't do that. Don't, take a credit mortgage on your house and put it in a risk-on asset. I'm super bullish for Bitcoin as well. It might be that, September is going to be a red number, a red candle again for Bitcoin. I don't know, honestly speaking. That's why I always say DCA your way in. If you want to accumulate Bitcoin, buy a little bit now, buy a little bit next month, and so on and so forth down the line. That way you don't need to think about, is it going up or down now? Because we tend to do not so smart, we tend to make not so smart decisions if really the moves are in there. This is a good question. Last question before we want to close the polls also for the positions you want me to take, guys. Your position are for scalping or swing trading. So what we are doing here today is, of course, hardcore scalping. Yeah, we are, we are using the power of the masses. So our Telegram community to decide which trades I should take, and I'm for sure, if those trades run into profit, going to close them out very fast again. I'm going to say a couple of words also on risk management when I enter the positions, but we are talking here really about scalping the markets. If you're more into swing trading, also join the Academy Telegram group. I quite frequently talk about possible swing trade setups, of course. If you are new to trading, starting with scalping is really, really hard. It's kind of, like you want to learn driving and your first car on your first driving lesson is a Formula One car. You're probably going to not be able to start it at all, or a very high likelihood that you are going to crash it into the next corner. So be careful. Good, guys. So I'm going to take a snapshot now on the results of the votes. And then we are going to take our positioning. So 3, 2, 1, 0. Great. Save this one quickly here. Here we go. And then I have to upload it here into my program. Good. So here are the results of what you guys want me to trade today. So most votes today, and this is something new, long gold. We want to have a long position, a buy position in gold. Second most votes, long Bitcoin. So kind of maybe actually positions that are kind of contradicting themselves, but still the community has spoken. We had something like this before, actually, that we actually had positions that kind of contradicted each other. But then we saw like a first swing up where we closed one position. Later, when the markets came down, we were able to close the second position in profit. So it's going to be for sure very, very interesting. So I'm going to open these positions now on my trading account. Here it is. So first one, gold, we find here under Forex. It's XAU, XAU / US dollar. Oh, sorry, this one down here. Here we go. And remember here, if you want to open the position, first, I recommend doing it with regular trading. So if we enter here and let's say we trade like, what do we have here? Let's trade 10 ounces or maybe 20 ounces actually. 20 ounces of gold. So when I go on this here, I see I want a market order. I could also do a limit order. I want to buy. I could also place a stop loss or take profit right now, which is always nice. You know, if I, for example, simulate here, okay, if I have my stop loss at 1,900, I'm going to lose 440 US dollars. I'm not placing a stop loss. I'm going to tell you also why in a moment. Let me place that buy order first for gold. So that's gold long, and the second most votes for long Bitcoin. Bitcoin, of course, you find here under crypto on the trading platform. And where is it? Bitcoin US dollar here. I'm going to go here with 3 Bitcoin again. Let me just double check again. Long Bitcoin, yeah. So going to buy here, going to do a market order. So here we go. You can see, let me make this a little bit bigger here for you. We now have bought 20 ounces of gold versus US dollar at around about 1,922 US dollars. We've bought 3 Bitcoin at 29,560 US dollars. Now, one word of advice here. You notice I have quite a larger balance here, 101,130 US dollar TIFA on my account. Like in relation to this account balance, the positions I choose here are of course rather small. I mean, it's not even, or it's around about, no, it's not even a leverage ratio of 1-to-1. Because I use so low leverage or not leverage at all, this is why I don't use stop loss here. If you chose, you want to trade something like this with more leverage, of course, it's highly recommended also to use the stop loss. However, don't pick the stop loss also to narrow here, because you don't want, you know, sometimes if the numbers come in very, very different from the expectation, you might see a lot of swing to the upside and downside first, and the likelihood of you being stopped out is very high. Also, news trading, despite people on social media maybe telling you something different, is always a gamble. I mean, it's fun for sure, you know, it's exciting, but it's always a gamble. Nobody prior to release of the data knows how the data is going to be, except maybe you are Jerome Powell or you are working for a labor statistics bureau or whatever. Then you might know this data, but it's really kept secret, and it's always a gamble. And I'm just doing this because we had so good results really with the academy community. So please do not risk all of your money. You know, if you have like $500 on your account, maybe risk like $5 or $10 on something like this. It's for the excitement, it's for the fun, of course. This is why we're doing here. And later on, you might want to choose a stop loss or take profit as well. What I always like to do is I like to change the trading method here to one-click trading, because that means later on when I choose to close the position, so when I click on the cross here, it's automatically immediately closed without me needing to confirm again. And since we are in a fast-paced market probably after the release, this is usually something I prefer to do. So I get kind of the price I'm seeing at that moment, right? Good. Let me just prepare. We still have 3 minutes to go. Prepare here a little bit and take my drawings out, because we want to switch obviously to the lower time frames also. So I'm going to, do I have any drawings on gold here right now? Let me see quickly. Not really, except this red box, because I always said at around 2,000 US dollars, gold is a short for me. Interestingly enough, it's at the lower side of the Bollinger Band here at the moment. I want to switch here maybe to a 5-minute chart. I think this is going to illustrate better for us the first reaction we are going to see. Automatically also here in Bitcoin, a 5-minute chart. Immediate reaction probably we're going to see here also on the S&P 500. So during the release, I'm going to maintain this window here, the S&P 500, because probably this is where we're going to see the first reaction. Later on, of course, we're going to switch to Bitcoin and gold to monitor our position. So 2 minutes to go still. And then we are going to see how things are. 1 minute to go, actually. Let me get the correct time so we can do a countdown, right? Alrighty. Good, guys. So I hope you are as ready as you can be. Like a shy upwards reaction here. And now we see, I don't have, sadly, on my laptop here a countdown by the second. As you can see in the background, I'm sitting somewhere else where I usually don't sit, because I'm on a trip right now. So let's see here where I'm going to switch here. So we see any second now it should come. Oh, and I think the initial reaction is down. Oh, now it's going up. Wow, this is quite a reaction. So inflation rate better than expected, 3.2% versus 3.3% expected. And we see already the S&P 500 jumping up here by quite a margin. The same with Bitcoin, quite a large candle. The same, hopefully, with gold also. So let's look here at our positions. Looking good. And since we're on the short time frame, I'm going to close the positions now quickly. We for sure make profit here. Let's look at the trading history of what we made. So we have a 148, 200, around about 250. Well, we have to take the commission into account, of course, as well. So around about 210 US dollars. Again, we made within, what was that like? Maybe 20 seconds. If at all, if you're still in the position, that's totally okay, by the way. First reaction, absolutely positive. And the funny thing here, in my opinion, is always that the first reaction of gold here is also to the north side. You would expect, like in a risk-on environment, that people are actually selling gold, but kind of the behavior of gold lately has changed by quite a lot. Yeah, might be that we changed, that we closed the position actually too early, but also what you usually see, we can see this now here in Bitcoin also, is that after this first initial spike up, that you see it like a reaction to the opposite again. So if you want to continue to trade this, you could actually try to kind of enter the markets again once you see a large candle down, but do that on your own risk probably. So I was just here for the first initial reaction. S&P 500 holding itself up very nicely. Let's have a look here. Yeah, we see also euro dollar jumping up by quite a margin, and this is kind of interesting. I want to switch here back to the daily one. That hurts a little bit because, we try to enter here at 109.25. Yeah, that would have been a trade that would have been up here already by 140 pips by now. So that's a bit of a shame. There, actually, we can see here, if you look at Bitcoin at the daily candle, the reaction is not that super severe. Still here, also in the S&P 500. This is, of course, because this was not a number now that was like so very much different from the expectation. As I said, what I like to see here, actually, guys, is whereas the core inflation came also down 4.7% versus the expected 4.8%. So this is really good. So if you are using this tool here, this FedWatch tool by the CME Group, cmegroup.com, you should actually see here probably in the upcoming hours that maybe this is changing a little bit. It changed already a little bit. No, we had, I think, 84.5%, if I'm not wrong, before of expecting stable rates rose already by 2%. It's always a very good tool to get like a feeling on what the market are doing. Excuse me. Yeah, it's awesome. I mean, it always looks like, if we switch back here, maybe to the 5-minute, always looks so back, but you can see again, like with our, so to say, our academy community, they picked exactly the positions again that had a nice spike to the upside, and we really only also traded this short spike. You can see, as I said, initial reaction. Usually you have a pullback after this. Doesn't mean it cannot continue into that direction, but of course we don't want too much exposure for too long to the market. Now, one question that always arises, and I completely understand this. Sorry, guys. Is like with the winnings from something like this. So with the, what was it again? 200 and something US dollars, 210 US dollars that we made today. What is going to happen to this? This is, of course, not money that I'm keeping for myself. This is the money we are giving back into the community, for example, by those sweepstakes with Discord, where you ask a question and you can win $25, and all the sweepstakes and bonuses and so on that you always see either on the Telegram community, those promo codes, for example, deposit bonus, reduction of trading fees, or sweepstakes that we make where you can win a little bit of money. This is how where this goes into this. Of course, it's not me, going out with my wife for a nice dinner or something like this. Although it's tempting, of course. Good. All right. I would say, how was it for you guys? Anybody that made some decent money today? If you made some money, or maybe also lost some money, there's no shame in admitting to lose money. That's part of trading, obviously. Then share it with us here. So let's see, maybe a couple of more questions before we call it a day. Of course, some questions that came in here before the release of the data. Yeah, this is a good question, in my opinion, here from Selçuk Murat Markas. What data should I follow to be a good trader in this market? I like this question very much because it shows that you are not the type of person who only wants, some special indicators that you can scalp or something like this, that you want to adapt your trading style to the market. And this is exactly what you should do. As a trader, you should not trade what you believe. You should always trade what you see. And it's very difficult sometimes, especially when you have been doing this for a long time. This is why I why I highlight always the importance of economic data. So you might have noticed on the Telegram channel, on a lot of videos I do also on this channel, I like to talk about fundamental data. And I do so because it's important, in my opinion, to have a fundamental long picture in your head. And the The data you should be following there at the moment are interest rates and inflation and the job markets. These three data, if you keep an eye on those, and you kind of can formulate a theory from this data, what you think is going to happen like 6 months or a year down the road, then you're already ahead of 99% of the market. That's my honest opinion, because the technical picture usually will follow the long-term picture, in my opinion. If you've been watching me, this channel for quite some time, you know that I'm quite bullish for next year. Actually, that I have been bullish since pretty much October 2022. And so far, that has served us a good purpose. And this was always derived from fundamental data. Then you can use something like technical data to kind of determine, okay, where might be good areas actually to go long, where might be good areas to go short. An example for this is, for example, is like my opinion on the S&P 500, where I said, when we hit up here with 4,580, I think the market's going to pull back now first. And so far it has done this. Interesting already also here that exactly at this area, we had also a sell signal from my sniper signal generator, which you can, by the way, also access if you go to the description of this video. This is a good example of how this system is supposed to be done. You get a signal into the direction exactly at a resistance, and you can see that the price followed this. So I'm bullish for the S&P 500, but of course that doesn't mean it's going straight up. I use then technical analysis to determine, okay, which is the farthest it could go up. When it pulls back, where maybe is a good area to re-enter the market then, which probably is here at around about 4,300 points at the moment. Very good question. So the fundamental picture always outweighs the technical picture. No winnings, guys, today. Nobody traded. I've kind of doubt that. Okay, one more question, and then we're going to call it a day. Question here from Lompra. Even if the inflation is lower than expected, why do we sometimes see crypto acting as no event? Yeah, because it's a summer hold probably at the moment. You have a lot of trader being on holidays. We have this, this sideways market at the moment still. Let me switch back here to Bitcoin, where not much is happening. It's the lowest volatility I think we've ever seen on a daily level from Bitcoin. So it's a bit like meh, And the reading we had today, even though it was, in my opinion, a good reading, like lower than expected CPI 3.2 versus 3.3% expectation, core inflation coming down. It's not so out of the ordinary. It's not so far outside or so much better than the expectation that it would really lead to, let's say, an institutional trader thinking like, oh, wow, inflation is coming down much faster than expected. Maybe I should take some more risk on positions in Bitcoin, in the S&P 500. And also do not forget, in comparison to more classic asset classes such as stocks, such as Forex, such also especially as gold or bonds, cryptocurrencies are still quite a small asset class. This is also why I give you guys always, the means to also vote other positions that I should trade outside of cryptocurrencies. But by the end of the day, it doesn't matter. We made, or you guys have to say, made the right pick again, which puts us in being correct 4.5 out of 5 times. 4.5 because that one time we had didn't win anything, didn't lose anything. So I think this is still for a trading strategy an impressive result. I hope you guys had as much fun being here with me today than I had hosting this live stream again. I'm going to see you again next Tuesday morning for the next episode of Bulls, Bears, and Breakfast. And then later that week, we're going to have a new regular video also on how the debt of the USA might be a problem in 2023, early 2024, to lead to some, let's say, more unpleasant volatility on the markets. Always remember to use the stop loss. And until then,